This is probabilistic mindset trading. We welcome you. Please kindly subscribe, like our videos, share the videos, and in the comment section give us your comments. Also, if you want us to make any video to clarify anything on the forex trading, kindly go to the comment section, give us your comment. We'll try to make the video to address whatever you don't understand or the challenges you are facing. Okay, so thank you very much for your time and joining us. Today, what we are going to give you is we're going to do a live analysis. Okay, yes. So a couple of our subscribers said we should make analysis so they will get to know how to do the analysis on the chart and how to approach the market. So today I'm going to show how we do our analysis and how we approach the market, the method we use. Okay, yeah. So what we do is we are swing traders. Okay, yeah, we are swing traders. So we trade for long, we trade for days, weeks. So we normally trade on the higher time frames and using the method of the top-down analysis for making our analysis. Okay, yeah. So with the top-down approach, we use the higher time frames as we stated earlier on. Okay, yeah. So we will try to not to take much time. We go straight to the charts, then we will try to understand what we are trying to say here. Okay, so this is it. Let's try to expand our okay. So what you see now is the this is a 15-minute chart. You can see we have a 15-minute chart here. Okay, so with this 15-minute chart, you can see that yes, the market is moving up here. Yeah, but because it's smaller time frame, the noise is there are a lot of noise in the market. So even if you make money, if you're not little careful about it, you make money and lose that money the same day or even a day after or some few days after. So what we advise is that it's better for you to stay in the higher time frames than the smaller time frames because there are a lot of noise in the smaller time frames. So this example, you can see this market move down and it's moving up, assuming when you entered here and you were thinking of going to this level down here. Okay, yeah, you see that it came now went back, it will take you out before it come down. Now it's pushing up again. So it all depends on the analysis you make. So 15 minutes, we don't normally trade the small time frames. So let's check the 4 hours for you to see the setup and the 4 hours is. So this is it, this is the 4 hours. You can see it here. Yes. So yes, we normally also put our trade using the 4 hours in the daily. Yes, but before we will put the trade, then we have already considered the bigger time frames. Already considered it. So before we will come to the 4 hours to put our trade. So let's go straight to the daily as well. You will see the daily chart. There's a daily chart. You can see it here nicely. Okay, so this is it. Yeah, let's go to the weekly. Okay, so guys, this is a direct market, a live market. So whatever you see here is live. Okay, so it's not a old market. This is live market. So we are going to do the analysis, and the same analysis you can use, follow it, how we are doing it, how to draw the important levels in the market. Okay, yeah, that's what to note, and how to draw the trend lines in the market, and how to identify the market structure, the current market structure. So to enable you to get to know what the crowds are doing, okay, for you to just follow them and make some little money out of the market. Okay. So by not wasting much time, let's dive into it and see, learn something here. Okay, so this is the weekly. First, we go to the weekly to draw the important levels in the market. Because we use the top-down analysis approach, yes, we go to the higher time frames to do analysis first. Starting from there, we move down to the lower time frames. Yes, this is how the top-down analysis is done for us to get to know the important levels in the market, where to enter the trade, when to enter the trade, where to exit the trade is very important. Okay, so let's try to get straight to it. Okay, so first we will try to identify the levels in the market. Okay, we come here to try to get the horizontal line. So you can see that this market moved from down here, it pushed up, and so far this one has been the highest level in the market currently. No price has passed this level, so we try to it's an important level there, so you give draw a line there. It's very important level. Yes, and when you can see that this market pushed up, came down, pushed up to this level, came down, pushed to the same, not the same level, but same area, and push down. So in this case, what we do is we try to put another line here, which is very important here. So market stopped here, market stopped here, push down, push up to also stop here, give a stop here, to push down, and here it passed the first point, but it did not reach the second point. So it's telling us that this place is a zone. It's a zone. It's a place that the price can pass this line. Okay, yeah, it can pass this line, but it may not even reach the second line. But it may stop in between here and pushed down. Yeah, likely. Okay, so this is a probability because we deal with probability. Everything here is not 100% because anybody can come in the market to make anything at all. Okay, yeah, the market players, any of them can come and make any changes to the market. Yeah, so whatever we do by putting in mind that trading is a probability game, therefore whatever happens, we embrace it. Okay, so this is it. Now let's move down to see if we get other levels as well. Yes, this market pushed to this level. We don't want to rush, we want to go systematically. Pushed up, pushed to this level, and pushed up here. So the same market pushed down, pushed up to the same level again, pushed down to this level. Now it is currently an uptrend. Okay, so what we do is this level is also very important here. So we will try to give a line. It's an important level here. Very, very important level. Okay, so nicely like this. Okay, so you can see we have a small stop here, major one, and another major one. Okay, Now let's move down. See, yes, market moved down here, pushed to this level, and when it pushed to this level, it came down, pushed up again. So stop at the same level. Here is also an important level to note in the market. So what we do, we have to draw line here to mark it. That is very important level. So you can see the same place the market came down, is supported from this end and pushed up before passing that level. So when you consider here too as well, you can see that some stops here as well. Here markets was supported. How many times? First, second, third, and here too. It was resisted here before it pushed up. So here is also an important level to note in the weekly. And we now proceed to next ones and see. Now you can see that when the market pushed up here, it came to a certain level. It pushed up again to the same level upward, came down to the same level downward. Okay, so this and this also give us an important level to note, very important level. So as you can see, we have to draw a line there as well. Okay, very important to note. Now we now proceed to, yes, here's the lowest level in the market now. So it's very important to also draw a line there to know that it's also a vital level to note. Okay. Now before this last level, this market it pushed up, came to this place, pushed up a little bit, came down, gave us two bottoms here before it pushed up and proceeded. So here too is very important to note, very important area in the market as well. And with the same place, you can see market pushed up, came to this level, pushed to this level, now came down. When it reached here, it's not approached this level, but hung in and also pushed up. So try to give. So this becomes a zone, a very important zone to note. Yes, market can hit, come to this level and push up, or it may reach the zone inside this place and push up, or it may hit this place, or it may pass by to come to this last level. Okay, yeah. So this is it for the weekly. This is all what we can see for the weekly. Okay, yeah, this is all what we can see. Let's try to see if there are other areas here too as well. Okay, let's see, let's check from here. Yes, this market pushed up to this level, pushed down, pushed up. Let's try to see if you get some levels here to support this claim. Yes. Okay. Yes. It hit here. Market also was supported here, pushed up before it came down. Yeah. So here too was resisted here before pushed up. So here too is also important level to note in the market. Okay. Yes, very important level to note. So as you see, these are our levels. So normally what we do is we try to draw our lines, our levels very well and lock them. So with the zones, we use the rectangle to draw our zones nicely. So as you see, So as we've drawn it nicely like this, we just try to so try to lock it. Then we delete our lines here. So this is a zone. We might use the gray color to indicate our important zone on weekly. So as soon as I see the gray color in the lower time frame, I know that that's a very important place to note because it is the weekly level as well. So when it comes to a single level, this like this, we try to use a trend line. So try to draw single trend line. Okay, so this is it. Hit it to the level. Delete the blue one. Try to zoom to get to know if the level is well touched. Yeah, so we have touched the level very well. Let's try to extend it. When you want to extend the line, we use the shift and the left key on the mouse. So try to extend the line. We lock our line. So these are a very important place to note in the market as well. Let's try to extend it a little bit here. Okay. So you see if we can copy. Yes, make it this way. Okay. So for you to copy a line, we use the control and the left key. Yeah, so you click the line, then you can make the copy very simple. Now let's try to lock these two lines here. So this is very important. We lock them. So that's a good part of the trading view. Yeah, so your lines will be permanent there until you delete them once you have locked the lines there. So this is it. Okay. Yeah, so now let's proceed to this place. For us not to waste much time in drawing the lines, let's try to copy and bring them down. So copied it. Let's try to lock it. Okay. Now this line, keep it here and delete the blue line. Okay. So let's try to extend it. So we try to delete the blue horizontal line, then zoom to get the level very well. Okay. Yes, we've gotten the level. So as you can see, we also have small portion here be passed by. Try to bring another line there. Lock our lines. Okay, so this is very important to note. Okay, so when we draw two lines, if you like, you can use the rectangle yes to because it seems as is on, you don't want these two lines. Yes, you can use this gray rectangle to indicate it here. We locate, then we can try to delete our horizontal lines. Okay, so now copy this, try to keep it here. Delete our blue line. Try to lock our line here. We proceed down. So here becomes a zone. Try to use so wherever you see it as a zone, use the rectangle to draw nicely like this, then try to lock it. Okay, so it's nicely done. So where it seems to you as the level can be drawn two times, yes, you can draw it and try to note that place. Okay, so that's it. Yeah, when you want to use a rectangle, yes, you can use a rectangle too. Such as this place, you drew two lines here. So you can use the rectangle So don't complicate it. Don't complicate what you do. Just make it simple. Then the simplicity will bring odds on your favor. Don't complicate the analysis. Don't complicate it that much. So you can see these levels are very clear in the market. Yes, I did not force it to draw the lines there. The lines are clear, or the levels are clear there by themselves. So just identify them. Being able to identify them is very important. So this is it. These are the important levels. Note, yeah. So as you can draw it this way or draw it a single line, which is also important. I would prefer the single line because this place is vital to me as a single level. So I'll draw it as a single level, lock it nicely. Now these are weekly lines. So as you see, our weekly lines is very important to note. So now that's all for our levels in the weekly. So we will proceed to the lower time frame like the daily to get to know if you have other levels there as well, trend lines or anything. But before we do that, let's try to check if we have a trend line in the weekly to be considered. Okay, so this is it. Let's try to get, so you can see, yes, we have some trend line here. Currently the market is on the bullish trend. Okay, so the overall now, yes, market moved up, came down, moved up, came down to the same level. Now it's pushing up. So I can see that this was the last high low it made. Okay, yeah. So it's when I consider this point, yes, there are some other points here to be considered, and I think this one will give us a trend line. So let's try and see if you get a perfect trend line here. Yeah, sure. So you can see, yes, we have point here, another point. We have another point. So two points will give you the trend line. So in this case, we have 3 points here. Okay. So yes, we have a perfect trend line here. This is our trend line. We just lock it nicely. Yeah, just like this, very nicely. So this is it. We have our trend line. Is very important to note. So you see that the overall where the market is and where it's going. Even totally, the overall is telling us that it is bullish. Okay, yes, bullish. So we now proceed to the lower time frame, like the daily, to get to know um, if you have other levels as well. But before we get to that, just check critically what is going on in the weekly. You can see that the current market structure here, you also have to be able to identify the market structure, which is very important, whether it's trending or is ranging. So when it comes to weekly, as is being viewed here, you can see that the current market structure here, we consider it as a range bound market. Let's see why it is range bound market. Okay, because the market was uptrending here. Now it came to this point, it stopped, came down to this point. Okay, now it pushed up to the same point upward here. So it gave us an important level to note. very, very important level. Now it's pushed down to the level down here, or to the point, the same point down here. Okay, so this also gave us another important level to note. So you can see whenever market makes two tops, two bottoms like this, it's very important that the market is trying to tell you that, hello guys, I'm in the range bound market. Okay, so um, just pay attention to what I'm doing, then you get some backs here. So because the weekly is in the range bound um, structure, what we do is we only trade it at the edges, the levels. Okay, the levels. Yeah, this is a range bound. So what we do is you only wait when the market get to the levels here, then you put your trade. Okay, so it doesn't necessarily means that as soon as the market gets there, then you just put your trade. No, you have to wait. When the markets approach to that level, we have to get another confluence, because our first confluence is our level here. We are waiting for a second confluence before, or third confluence before we can authorize any trade. Okay, yes. So as you see, this is our first confluence here. Okay, yeah. So our second confluence, you're waiting for the candlestick pattern when it's approached before we will make any decision here. So further on, let's try to consider these levels here and see if why these levels were important, and why if I was there or I saw it earlier, or I was analyzing this, why should I take this trade even though the levels has been identified, but why should I have taken trade or put a trade to enjoy this kind of trade here? Okay, let's try to see zoom and see, check something here. This is the first point. Okay, so this is the weekly. So you can see that the first point in the weekly, it was a very long sell here. It did not engulf, a very long one. Okay, for the second point, yes, this one give us an inside bar. Okay, yes, so it's very important. Now let's come to the bottom. The first bottom, it gives us an inside bar. Okay, it gives us an inside bar here. Yes, and the second bottom, let's see, yes, so yeah, so you can see here, yeah, the selling momentum was losing. Okay, yeah, it lost here, but you will not get the exact point here unless we try to push down to the daily to check, because you are able to identify your levels in the weekly, which is very important. Okay, now let's see that this point that was made in the weekly, what was it in the daily? Okay, so the daily and the 4 hours will give you the signal, very well signal, because you can see the first point we checked, it was a long sell candle. Okay, but it wasn't a signal in the weekly. Okay, yeah, so the second point was a signal, same likewise the bottom as well. Okay, so let's try to push to the daily to see what kind of signals were given, yeah, for us to join the trade. Okay, so we shift to the daily. So as we can see with the weekly, we are able to identify the levels. That is what you have to do in the weekly. Very important. Now this is the daily. This was our first point. Sorry, our second point. So this was the first point. Let's zoom in and see. Yeah, so yes, this point in the daily is giving us a shooting bar. There was a shooting bar. Yes, so this shooting bar, the market proceeded down here to this level. Okay, so even if we put a trade, this is where we would have put our trade on daily. Okay, so because this one gave a shooting bar, it wasn't a clear shooting bar because the body is a little bit bigger. Okay, yes, so for you to consider a clear shooting bar, a very important one to note in the market. The wick here must equals to twice the body. Okay, yes. So you can see that this twice of this will be more than the wick. So this is not clear. The exact one here on the daily. So even if you put a trade on the daily here, you will wait for this candle to form, and this one will tell you that hello guys, we are in the sell mode, man. So that's where you try to put your sell trade. So even if you would have traded this way we would have put our trade. So to be somewhere here and put our stop loss just above this candle, and we push to the level. We will try to push to this level here. Yeah, because it's a range bound market. You know that no matter what you do, this market is coming down here. So it's 1:7, 1:7, which is very important. So if I'm risking 291 pips, yes, then I'll be getting 2,204.3 pips. Okay, so this once I just identify it, put my trade here. You don't look back, you don't look any sideways. Okay, you be in this trade until when your stop loss is hit or your take profit is hit. Okay, yeah. So this is the probabilistic mindset trading. Before you put any of your trade, you have to do your calculation, calculate your risk. Okay, you know your risk appetite, calculate it. Then when it is done, put your trade. Don't, as soon as I put this trade or we put this trade, we keep our things somewhere. We don't even get access to it. It's there. Yes, because I'll be doing my own thing because this one will take long. It's a long trade. You are in. Some it can take months, some it can take weeks to uh, reach here, okay, to the level. So if you actually don't want to proceed to this level here, you'll be okay here. Yes, this is also an important place to note. Yes, reach here, can take my profit and leave 1:4. Okay, yes, but because this has been identified as a range bound market, it will normally come to the end level. Okay, normally come. So coming here is not any mistake or not being greedy in the market. This is the advantage you have, that you have been able to identify the market structure, which is very important. Very, very important. So at this point, this is it. Okay, very important. Now let's try to go to the second upper point, sorry, on the daily to see. So our first confluence was there, which is the level. We're waiting for our second confluence, which will be the candlestick pattern in this case. So yes, the market was pushing up the high momentum. Now what's happened was a doji was formed. Okay, so you can see this doji simple means the indecision in the market. There was an indecision in the market here. This doji. Okay, so as soon as it was formed, now the sellers came in, pushed the market to this level. It was resisted a little. It was supported a little bit to this level. So you can see that with this, what we see here, this bullish, this doji, and this bearish candle here is telling us that this one is an evening star candlestick pattern. Okay, it's very important. So as soon as we see this, we know that the reversal of this trend is about to happen. Okay, yes. So you can see the next candlestick was bullish. Then the next one was also a small doji here. Okay, so this also represents an indice in the market. So considering the bullish and this bearish candle here, it's telling that this one is an inside bar candlestick pattern. That's harami. Okay, so for us to get to know that, if we did not trade this and we wanted to trade this one, we have to wait to see what is the next candle after the harami candlestick pattern here. Okay, so this is the inside bar. So for this one to be valid, we have to wait for the harami candlestick pattern to be broken. Okay, this level. So this is it. So as soon as there was a sell candle which passed this level, yes, it has broke this level. Now we will put our trade. So in this case, go to short, you put our trade, whether you put it here or wherever you put it, but it will be in this area. We put our stop loss just above it, or if you have more risk appetite, yes, you can push it to this level as well. If not, just above the bullish candle, above this bullish candle. Okay, yeah, just like this. Then we try to either push to this level, or because it has been already been identified as a range bound market, then you can push to this place, which is very important, and you're not being great. So you can see 1:6 is a very fair trade here, and very important to take. Very, very, very important in the market. So this is how to trade a range bound market. Okay, so let's try to delete it and go to the bottoms and see why you should have taken this trade. Why should I have taken the buying opportunity here? Okay, first, the confluence was identified as the support level here in the range bound market. So what is the second confluence? You can see that here, yes, the market was pushing down massively, and when it reached here, it was rejected. Okay, yes, and gave us a bearish here, and the bearish was being engulfed, totally engulfed. Okay, so you can see that after the rejection, the selling pressure was being engulfed by the buying pressure. So this is very important signal for us to note. It was very, very, very important signal. This very, very important. This bearish candle and this bullish. Yeah, so the bulls engulfed the sellers. Okay, yeah, the bulls engulfed the best. So as soon as I saw this rejection and see this candlestick pattern, I knew that the market is about to push up. Very, very important about it. So this bullish, it represents capitulation in the markets since it is formed at the bottom. It is very, 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 very important, and is a critical place to note. As soon as I see this in the bottom, then with our analysis and confluences, it's very important for us to take this trade by not looking any sideways. So once this was engulfed, our trade will be somewhere here. Sorry. So then it will be just above this point. This was the pin bar, yes, or you can just bring it above the bullish candlestick. So you can see somewhere like this. Then it's a very high low risk appetite trade. So you can see 58 pips. Then that's what we'll be enjoying. So we push up to this level. Even to this level is giving us something like 1:15, which is a very fair trade. So you can see how you will be getting your trades, very important trades. Okay, or you pushed because it has been identified as a range bound market. You can see you'll be enjoying 1:43, which is very very, very important in the forex trading field or the forex trading market. Okay, so you can see it's very important. So this is the importance of a top-down analysis approach. Yes, and the ability to also identify the market structure is very, very important. So you can see the first bottom point. Let's try to see the second level point at the bottom and see why we should have taken this trade. Okay. So as the market was pushing down, it's rejected from here. Okay, yes, and so this rejection, you can see one rejection, you can see second rejection. So this rejection was on a trend line. Okay, it's rejected also on the weekly trend line, which is very important. So we have two confluences here. Okay, two confluences here. The first confluence here is our zone, our level. The level here is one confluence. Second confluence is our trend line. Then before we will now consider the third confluence being the candlestick pattern. Okay, so you can see here only these two confluences tells us that yes, we should take this buying opportunity for us. We should take this opportunity and enjoy, because as soon as you can see this rejection, two rejections here, the second one is more powerful. Why? Because this one tells you that it was selling, but the bulls rejected this market, and this candlestick became a bullish candlestick. Is very important to note. So this one is a very low risk appetite trade to take. So as soon as we want to take this one, this is where we would have put our trade somewhere here and enjoy this trade. So this way it will be a risky 64.8. Then we will push up. So this one was the middle, but because this structure has been identified as a range bound market structure, you know where the price is heading to. So either you stop here and enjoy your 1:14, or you proceed up to that level. Okay, so with this trading approach we use is patience. You have to exercise patience because trading itself need a calm mind, patience to get to enjoy a good ratio profit in the market. Okay, so you can see pushing up is 1:40, and if I get this trade just within a year, and I've gotten this 1:40, I don't need much trades again. I'm okay for the year, the whole year. I'm okay for that. Okay, so there is it depending on the lot size and other things that you used. Yes, and I'll be okay. 1:40 for a year, and how many pips here? We'll be getting something like that's 2,595.5 pips, and getting 2,500 pips. This is not a small pips when it comes to as far as trading is concerned. No, it's not a small pip. So you can see whatever we are showing here or are taking you through is very important. So don't rush the market. So it can, because you can see how we are being able to get this number of pips in the market. So it tells you that we wait for long. Okay, we really wait for long because before we will put any trade, we have to make sure that we have gotten the confluences meeting, yes, before we can put a trade. So the way we put our trade, it will take long for us to enjoy. The same way we also wait for long before we put any trades. So within the year, you can put 1 or 2 trades, three or four trades within a year. It will be more profitable for you. At least putting 3 trades in the year or 2 trades in the year, and winning one and losing one is a win-win game for you, because if I have put a trade like this, risking 64.8 and getting 2,595.5 pips, assuming I won this trade and I lost the first one, which was I was risking 58 points, you can see total I have lost 58 pips and have gained 2,595.5 pips. So just imagine, you see. So it doesn't necessarily mean that you have to put more trades to be a profitable trader. No, what it takes is putting an important trades in the market, very important ones. Yes, even 1 trade or 2 trades in the market within a year is very important. Very, very, very important. Okay. So this is it. You can see for the down point being seen here, why you should have taken this trade on the daily. Then if you want to consider the 4 hours, 2 years, it can be considered as well. So you see. So now let's try to see with our daily and see if we will have some levels here as well. Okay, so you can see that this is also a level to note. Markets which they stopped, they say, so this becomes a zone. It stopped, pushed up above it, and this can be a market. This is where the market is currently at. Okay, but what we will say is currently the market is trending up. Currently, it's trending up. So you can see that there is several points here that we can join them to give us a trend line in the daily time frame. So there is a first point here. Let's try to see if we get another point. Yes, another point, another point, another point. So these are the points here. It's very critical very, very critical to note. Okay, so guys, so this is it. Okay, guys, so this is it. So our first point, we have a second point, third, fourth. It's very important. So as we said earlier, we normally use colors to identify our lines. So you can see I've used this color to identify. So anytime I see this line in the lower time frame, like I go to the 4H and I see this line, it tells me that this one is a trend line in the daily. It's a daily trend line. Okay, yeah. So use colors to identify them. So this is it. We have a strong trend line here. Let's try to proceed to the 4 hours and see if we get something there also to note, like a trend line. Yes, there is one also here. There is one also here in the 4 hours time frame. So you can see that the market is trending up. Okay, it's doing higher lows, higher highs and higher lows here. So try to, yes, this is possible. So this is it. This is another important level to note in the 4 hours. Okay, that's the trend line. So we can use different color tools to identify it. As soon as we see this in lower time frames, like the 3 hours, the 2 hours, 1 hour, 15 minutes, you see that this one is a trend line in the 4 hour time frame. So this is it. Okay, so these are the important place to know. So you can see the market is pushing up. This one's a trend. Okay, it's actually a trend. Same 4 hours. You can see we have another small trend line here as well. Yeah. So if you follow it, you'll be drawing lines, a lot of lines. Um, on your chart. You'll be drawing a lot of lines, but you keep your chart very neat and simple. Okay, so this is it. This is it because I'll not draw much lines here to indicate anything. Why? Because we have already identified that in the weekly that this one is a range bound market. Since it's a range bound market, um, these lines were just guiding me to get to know that yes, truly it is bullish, and when the market is approaching these trend lines, whether it is the weekly, the 4 hour, or the daily trend line, it tells me what it will be doing, whether it's projected, and when it passes by, you know where the market is going next. So, as you see, this one was rejected here and it's pushing up. Okay, yeah. So the same line here, trend line here, it was rejected. This is the 4 hour, and same portion also is very, very clear in the the weekly time frame as well. So you can see it's very important place to note. Okay. So as I see this market, I know that the market is pushing up. Yes, this market is pushing up. It's very important. So we have already identified the market structure in the weekly time frame, which is telling us that it is a range bound market. So we will exercise patience to wait for this market to approach to this level. And when it approaches this level, that's when we will wait for the other confluence, yes, to put a trade. So in summary, what you have to do is exercise patience, make sure that your confluence are being met. Don't use one confluence to put a trade. Example like this, if we exercise patience for this, for price to approach this level, as soon as approached and we put a trade whether to sell these markets, it is a wrong way of trading. Yes, so we, as soon as it approached, because this can pass by, give us a signal that is continue upward. Okay, so as soon as it gets here, because this one is a range bound market, and range bound market, when it reach these levels like this, yes, it's testing the two support and resistance levels, which the price is ranging between it. And when one is broken, yes, the market will push either up, or when it broke it down, it will push down. Okay, so what we are saying here is don't use one confluence, wait for two or more confluence being met before you put any trade. Okay, so that's all for the USD CAD, because we trade the bigger time frame, so we will not proceed much to the lower time frames. And you can see on our chart, we don't have too much lines on our chart. This is how your chart should be. And also, we don't use much indicators in the for our trading. Okay, so the only indicator you see, we have the MACD indicator, and we have the moving average. Okay, so this is it. We also use sections. Mostly sections are used when we want to consider the lower time frames, like the 1 hour, the 15 minutes, 3 hours, 2 hours. We use sections, and you get them, all these indicators, on the trading view. Okay, so with the trading view we use the trial version, the free version. It is free to use. Just go use your email address to sign up trading view, and you can see the layouts like this, and you can just go straight to do your analysis. Okay, so why we prefer trading view? Because it has a lot of tools, and the tools are very important, and it makes the work very easy for you. You need the paid version of the trading view. Yes, as soon as you've registered and everything, the free version you pay, and you can use the paid version as well. The difference is that the free version is limited to tools. Okay, tools, let's take indicators, but the paid version has a lot of indicators. You can use as many as indicators. As we said earlier, probabilistic mindset trading, we don't need much indicators in our trade. Okay, in our trading environment, so we only use the MACD and the moving average for analysis. Okay, that's all what we use. Yes, on our channel. You can see, just make it simple, don't complicate it. Make it very simple. And as we proceed down, why should we have taken some trades here? You can see that let's go to the weekly, and you can see something here using our MACD. You can see that before you also consider this one, there are a lot of, as we said, a lot of confluences. Okay, one of the confluence also here is the high highs and higher lows, or lower lows and lower highs. is also very important and to note. Why? Because when the higher high or the higher low or lower low or lower high is being broken, okay, yeah, it's very important to know that yeah, the market structure has been broken. Therefore, you have to change the way you are trading and get to know where the market is going, where it will come, and how to proceed to it. Okay, so you can see the weekly, this market was pushing up. Okay, so it was pushing up, but at the same area, not pushing that high enough. Okay, yes. So what's happening is you can see that it's pushed up, all right, push down, push up, but it was at this place. Okay, yes. So this is it. So just at this area. Yeah. So when market was able to push up, you can see that here here was the high here. Okay, here is the high on the MACD. You can see it's blue. So here is the high. It pushed down to the low, which is this place. MACD is telling us that it's red, it's low. The next one was high, shown by MACD. So you can see the lows here. These ones were considered as low. Yes, there was no high here before we came to this high here on MACD. And this high, there was no low here. It came down, but the low wasn't well identified by MACD, so it pushed up. So the final high here is this one. Okay, so this one was the latest high at this level. So this one, what we do is, since it was the latest level, you can just mark it with a line. And whenever this line is broken, you know that the market is trying to push up. So this was the market structure. This was it's an uptrend, and this is it. This was the latest higher high in the market at that time. So you draw a line to indicate it. Okay. So since this market moved down here to make a low, it pushed up to make a high. Okay, so whenever the market structure is broken, yeah, let's take like 60 to 70% the market may return back. Some it will not return. So we can see that when this market passed by this level or broke the market structure, yes, it went up here and now it came back. Okay, so this was the best opportunity for us to join this trade. Why we are not putting any trade now, waiting for the market to reach our level. Okay, so let's go to 4 hour time frame, and you see. So yes, truly the 4 hour, this was the high. You can see when the market broke, it came down, because we try to use the weekly. Why? Because you can see there are a lot of highs here, a lot of highs before you came to this place. So for it to be simple for you to know that the high that was made before the low, before the other high was made to build the structure, it was this one. Okay, so that's why we use the weekly, for you to get the clear understanding. But when you would have used the 4 hours or the daily, you not get it. You say that there are a lot of highs there. Okay, because the market players are using the higher time frames. When you follow the higher time frames, that's where you will get their footsteps, what they are doing. So we go to lower time frame like the 4 hours, we just put our trades there. Okay, yes. So this is it. Now we are analyzing everything on the weekly time frame. So this was our high, our latest high. This was our latest low. Market broke the latest high. It broke it, and whenever the market broke, we call it this breakup structure. Okay, since it broke the structure, the market will return. That's 60 to 70%. It will turn back before it pushed up. Okay, So we go to the 4 hours, you can see there's truly broke, market came back, and when it came back, what pattern was formed, what confluence was formed for us to take this trade. Okay, so you can see we have remaining the 4 hours. You can see this was it. Okay, so the main thing was here. Okay, yeah, so let's consider this as a tweezer's bottom. This is a tweezer's bottom. Okay, this one, this bearish and this bullish tweezer's bottom. Yeah, so tweezer's bottom was formed. Yeah, so once this, we see this at the next candle was a bullish, just on top of the first bullish candle. So it's telling us that, so this was the open, the close. The open was just above the close of the first candlestick. The first candlestick. So as soon as this was in, we just consider and get to know that yes, the market was actually going to push up. Okay, so we will just try to get in by bringing our. So this way we get in the market. We put our trade somewhere here. So our trades will be when this one was the bullish candlestick finishes. You can see this is it. Okay, so we put our stop loss somewhere here. We're risking 94.8 pips. Yes, because we are swing traders, yeah, we don't mix this kind of pips, then we'll be getting more pips out of that. Okay, so you can see, so we'll be put our trade here because this is where we will be putting our trade and where we try to stop. We will try to stop somewhere here. You can see this one is 4 hours, so this is where we will try to end. There is a stop here, so we'll try to end at this level. Okay, yeah, so we are risking 94 to get 493, which is 1:5. It's a fair trade. So this way will be try to end. Okay, yeah. So market was resisted here the 4 hours. So this is, or if not, we will also proceed to this one as well. Okay, so this is it. This is all what we would have done, and we wouldn't have missed this opportunity. So now you know that as a swing trader, you know that currently for the markets now in the USD CAD, it is the swing trader. I know that I have to wait because the chance of getting in is very slim here. So I will wait and check other pairs to get to know if we have opportunity there to get whatever we need there, and exercise patience on the USD CAD to wait for the market to do or give us the opportunity to join and enjoy. Okay, yeah. So this is all what we can say, and this is all what we can do now. So when you follow our steps and also our method, you can see it's very simple, and you exercise patience and you will not rush in putting trades and losing your money. Okay, yeah. So you can see it here, very simple. And so since our weekly is telling us, so as we take you through, you can see the weekly is very powerful. The high time frames are very powerful. So as the weekly was telling us that this one was the high, okay, and it's broken, it's came back, it's pushing up. Now the weekly is trying to tell me that this is the latest higher high here. So you can see this is the latest higher high. So even if you will put another trade, you will wait. Even if you will try to put any trade on the USD CAD, we will wait. Okay, yes, we will wait for this high to be broken. Okay, as soon as this market come and pass this one, yes, we will exercise patience to see if the market will come back. If it come back to the same level or to the same area, then we will try to join the trade and push up to this level. Okay, yeah. So this is it, because it hasn't given us the opportunity yet to wait. Because when you enter in the middle here, likely the market can push down a little bit before going up, and you end up losing money. So the higher time frame has showed us, it has given us the footsteps, given us the direction. You just have to exercise patience to follow. Okay. So in this case, what will happen is looking forward to this market to push up here, and when it push up, we don't know where as long up it will go, but what we're trying to say, when it push up above this level, we will wait for it to come back here before we will try to join this trade. And even when it's coming back, you don't just wait as the market reaches here, then you enter a buy. No, we have to also check the confluences. So this one will be our first confluence. This is the level as our first confluence. So our second confluence will be the candlestick pattern. What candlestick pattern will be formed here before we will try to enter a trade. Okay. Yeah. So it's very important. If the candlestick, there's no a clear candlestick pattern here, we will not join this trade and leave it to reach our level before, if there is any decision that will be made, then we will try to make that decision before we will join any of these trades. Okay, so that's all for now. Thank you very much for joining us. Be very happy to like our videos, share our videos. Please don't forget to subscribe to our channel, and in the comment section, give us your comment. If you need any clarity on anything, just prompt us. We will try to get back to you, make a video to explain whatever you need clarity about, and we promise you we'll give you the best. And when you follow our approach in trading, you will not be risking your money. Okay, you will not be losing a lot of money in the market. And let's remind you, this is not a financial advice. Okay, yeah, we are not a financial institution to give you advice. We are just taking you through how our approach, how we approach the market. You can follow if you're okay with it. You can just follow us and also use. So you can see that with the way we approach the market, it's very simple and easy. We don't rush to make any quick decisions. We just have to take time for the market to come to you before we also join it. Okay. Thank you very much. This was Holistic Mindset Trading. See you in our next video. Bye.